So Nick is the CMO of Gabi, which is basically like an Expedia for insurance. It compares auto and home insurance rates across top providers to find you the best deal. So that's a pretty cool thing. And then Matt is the head of customer acquisition at Haven Life, which is a Mass Mutual-backed startup that offers an easy online solution for buying affordable life insurance. So they've got the big guns behind them, but they're a startup. So you guys are both disruptors in what is pretty much a legacy industry. Let's take a couple of minutes to discuss how you are each innovating in your respective spaces.
Sure. Who do you want to start?
Nick, why don't you go ahead?
Cool. So home and auto insurance in marketplaces aren't necessarily a new thing, right? For a long time, you've been able to go to different websites and kind of sort of look at different providers. What we're disrupting is the shopping experience. So, I think about 8 to 10 years ago, it was novel when D2Cs came to play. I was at Dollar Shave Club then, and it was transparency, access, control. The consumers wanted that, right? I want to be able to talk to this brand. I want to know what's happening, and I want to know why. And I want control of what's going on, even with my razors to my insurance to whatever's going on. So with Gabi, what we do is we show you real rates within our 40 different insurance providers. So we are an agent. So think of us as one of the largest online agents or brokers in the home and auto insurance space. So we partner with the carriers, and all we do is help you find a better deal. What we do a little bit different, and what we disrupt is that shopping experience, like I said. How many of you shopped for insurance and tried to compare rates, and it's a nightmare? I'm sure everyone is raising their hand that's watching this panel. And what we try to do is just make it a little bit easier, and put the customer in control and give them some transparency. You come in and you upload your existing policy or link it, kind of like a plaid type of an experience, and we give you that apples to apples comparison. So a lot of times in our category specifically, there's a lot of bait and switch. Here's a really low price, but when you go put the coverage you're looking for, it gets really expensive. So we try really hard to be as transparent as we can with all the information that we have. So we're disrupting on behalf of the consumer. The big guys that we partner with, they just don't have as much incentive to innovate the shopping experience or to provide an unbiased one. So that's what we're doing today, and it's really seeming to work. When we can find people these savings, most people that use us had never heard of what we can do, and are saving over $800-900 on a yearly basis, and it's pretty exciting.
And you guys are free, so it doesn't cost anything to use, just to get a savings. So how can
we're free? Yeah, the carriers pay us like a normal agent. We make a commission on all the premium, and we don't charge the customer, and we don't make any money selling leads like some of the category or some lead gen type things, like if you've ever shopped for a home with home loans or even car insurance. So I think the difference with us, which is exciting, is we monetize from the carrier. It's free to the customer, and your data is safe with us, which is a big differentiator from some of the category.
Well, I'm here in Detroit, and car and home insurance they're both extremely expensive. So I'm going to be on your site tonight seeing what I can find out, because,
awesome.
I'd like to save some money too. So
I love it.
So Matt, you're at Haven Life, and you've got Mass Mutual behind you. So how are you guys a disruptor?
Yeah, so if you think about how life insurance has been sold for hundreds of years, it's been directly over a table. You sit down with your broker, you kind of walk through your options. Mass Mutual, recognized a few years back, there's this gigantic shift towards the purchasing everything online, right, or purchasing in a digital experience. So they kind of set us up as an incubation hub, more or less, for Mass Mutual. So on one end, we provide a digital direct way to purchase life insurance, 100% online. People that don't want to meet with an agent, they can find a direct avenue to getting coverage that they need, with no kind of pushy sales calls, no agents kind of involved there. Just just the coverage you need, simple term policies, right? On the other end, we're kind of an incubation lab, right? So if that's down to how we market and acquire customers, how we design products, how we work through, things like underwriting in a digital world, we kind of create tests internally, pilot them, and then hopefully move that technology on to Mass Mutual. So fundamentally, we are a technology company innovating the kind of purchase process for life insurance.
Great. Okay. That makes sense. So most financial sales are transactional in nature. So how are upstart brands like the two that you guys had thinking about customer satisfaction, LTV, and other metrics in a world that is pretty much ruled by sheer transaction volume? Nick, do you want to go ahead and start?
Yeah, I mean, I think that's kind of why we're here, and it's one of our kind of unique differentiators is the relationship, right? So, my industry or our industry in insurance has a pretty low NPS, right? I think it's like 37. With our purchasers, it's like 85, right? And so now I'll be honest, the people that don't buy from me, it's not 85, right? It's closer to the industry average. So I'll be honest with y'all. But I think, how my business can scale is thinking about that relationship, right? And how much does it cost me to bring them in and show them what we can do? And then how do I retain them, right? If insurance average lifetime value is between 3 to 7 to 10 years that you stay with your insurance company, I think it's all about the relationship. I think Amanda at Goldman Sachs had mentioned earlier the notion of the value exchange. I use those words a lot, right? So how do we create enough value to get you to stick around and not piss you off? And with something like Gabi, perhaps if your rates go up over a year or two, you can shop within our marketplace and stay a Gabi customer, but change out the carrier that you're working with. So I think there's some potential there. So for us, our motto and some of our core values as a company, we're a couple years old, is, leave $1 on the table today for $2 tomorrow and put the customer first. And it's hard, right? Because we get a lot of traffic in and we can't convert everybody. And there's a lot of opportunity that we could make a lot more money if we sell that traffic. And right now we're not doing that, right? And it's hard decisions that we make for, we're leaving money on the table by design for that relationship so we can build relationships. Today, we're largely about the shopping experience. Tomorrow, maybe I can start distributing, Haven with Matt and Life and all sorts of different lines. And you can use me to manage all of your policies and make sure you have the right coverage at the right price at all times. So inherently, insurance is a relationship business. It just hasn't been one for us, right? If you think about your relationship with your insurance company, you kind of shake your head and say, what do you mean? I can't get anyone on the phone. And if I do, it's a horrible experience, right? And that's not just insurance. There's lots of industries that can say that. So for me, how do I focus on, surprising and delighting and creating that value exchange? Unfortunately, it's very price driven today. And I'm trying to shift that for transparency and giving access to those things that I mentioned before that are kind of inherent expectations these days with consumers.
Great. Matt, how about you guys at Haven Life? How do you look at customer satisfaction, LTV, and other metrics?
Yeah, I think there's kind of two angles in how we look at it, right? So on one end, we are acquiring a customer that's kind of younger and earlier in their financial adulthood than typical life insurance customers. So typical life insurance customers in their 40s to 50s, our customer on average is about 35 years old. So they're earlier on in the process. So one of the things we really want to focus on is how do you create a easy experience, a brand that kind of appeals to them so that as they need additional coverage, additional products, and we offer them over time, they'll be a returning customer, not just a one-time sale, right? So one of the things we've done there is we launched, it's technically a rider added onto your policy, but it costs no money. It's called Haven Life Plus. And what this is, it's really a series of living benefits that we give to you. The idea here is, being more than a monthly bill. 2/3 of people can't remember or recall who their life insurance carrier is, who their policy is with. And we want to kind of build that brand recognition and that kind of stickiness. So what Haven Life Plus does is gives you kind of living benefits. So no additional charge, no additional premium on your policy. You get things like a free will service. All you have to do is fill it out online, take it to a notary, notarize it, and you have a free will. A yearly subscription to a workout app called Active to keep you healthy and fit and living longer. And there's a bunch of services in the program. We're constantly adding more, but that is a huge driver of kind of building that stickiness with the customers kind of as they enter into their kind of insurance adulthood, right? On the other hand, right, we're leveraging that to really drive word of mouth, right, and lower acquisition costs. So we find almost a quarter of our policyholders add a spouse, right? Driven by word of mouth. We're trying to drive friends, family, acquaintances, kind of have our customers be the agent of the broker here, really talk about a positive experience purchasing a product that nobody really wants to talk about because it makes you confront mortality, right? But have a really great positive experience for selling that product and hope that that helps spur, word of mouth marketing, lower customer acquisition costs. And we're keen on NPS, right? So we just kind of compiled our NPS from last quarter, from Q2, and it stood at 77, which I think is really amazing considering it was kind of during peak COVID, right? In a world where medical exams were hard to get. People were really worried and kind of, fraught, and we were still able to drive, 77 NPS by really focusing on the customer, over communicating with them and making some product changes to help them out during a difficult time.
Yeah, we're going to talk a little bit about the pandemic in a minute. But first off, I wanted to ask you guys, I know you're both dealing with limited budgets. So with the legacy brands spending maybe 100 times more than you do, how are you agile in customer acquisition and growth? This could be, anybody could learn from this, even the big brands, I'm sure.
That's the name of the game, I think, regardless of category, industry, company. I've kind of been doing the kind of, we're the pirates, they're the Navy, we're zigging and zagging while they're slow and steady. I've been doing that now my whole career. And so I kind of have a methodology and a framework that I take with me that isn't proprietary. Lots of people do it. There's a lot of companies that are scaling, that are young D2Cs, but it's, it's this real-time testing framework. It's real-time data. It's, optimization every day, but being careful not to over-optimize, right? There's maturity that needs to happen with leads on an insurance perspective, right? And so if you optimize your Facebook today based on today's metrics, you might be cutting off your nose and over-optimizing, right? So, really thinking about where do we, I have a very simple formula that I've used that continues to work. What's the problem that we're solving in the market? And I've said this at another MediaPost conference, right? What's the solution and what's the tension we can rub on, right? And it's a very simple formula that all of us can probably say, whether it's a financial service or it's a CPG product. And so, I could spit you our formula, right? But the high level is agility. And we'll talk about the pandemic in your next question, right? But I'll tell you, it's made us more agile, the pandemic, but I have stand-ups like an engineering culture 3 times a week with the team where we do readouts, what's pacing per forecast, where do we shift dollars? Some people on my team that, I hire go, gosh, this is too frequent that we're optimizing. But at the end of every month, we hit the number almost to the %, right? So I think working this way, really kind of gives us the ability to scale. And not to mention the companies I've been at, and this company specifically, we've 3x'd spend over a couple month period. So it's not just holding the line, it's how do you continue to grow and find more efficiency, right? So it's getting smarter and optimizing. And honestly, there's a whole discussion to be had about each media channel or, owned channel, right? I could talk for an hour about TV. Maybe Steve, I should come to the TV summit about how we are agile compared to the big guys, right? Because in insurance, every other ad on TV is a funny, awesome spot from a big brand that we work with. How in the heck do I compete, right? How do I stand out? And I have some answers for that. It's like that unique value prop. It's zigging and zagging and buying remnants and fire sale stuff and knowing where the big guys are buying and jumping on those tails, right? That kind of stuff. But a lot of agility and a lot of optimization and this kind of engineering stand-up culture is kind of my quick response.
And Matt, what about you guys? Do you get to borrow off of Mass Mutual's budget, or do you pretty much have to stick to your own small budget?
I wish. No, we have our own budget. For us, everything I think boils down to data and how do we use data to optimize our marketing. So I'll talk to kind of, I think, 2 specific examples. The first is we have developed this kind of proprietary score. So we know in real time when somebody comes in and applies with us, the likelihood, the percentage of whether they're going to actually buy a policy with us. And what we can do is tie that back to a source, right? Did that come from Facebook? Did that come from one of our affiliate partners? Basically any online source. So we can tell in real time the qualityhood and the likelihood to convert these leads into sales, even though the sales cycle can be up to 90 days for them to take a medical exam. We still have a really good indicator based on the information in their application, whether or not they're going to buy, right? So that allows us to optimize sources on a daily basis, right? So we can turn up sources that are really performing, turn down sources that aren't, cut off the poorest, right? And allows us to just optimize and be much more efficient. You know, when I started here, it would take us a month to figure out whether or not this source of traffic would be worth it, and we could waste a lot of money really fast, right? So this allows us to be agile and near real time in kind of making our marketing decisions. It's one kind of big one. The other one too is the one thing we do lean on Mass Mutual for a lot that really helps us out is their data science department. So we've been able to build really strong kind of upper funnel targeting audiences, leveraging kind of the data scientists that work with us, leveraging a lot of our own first party data, some historical Mass Mutual data, and some kind of third party offline, psychographic and demographic data. And this allows us to see who's bought with us, who's purchased with us, and find, it's essentially a lookalike as you would find on Facebook. But instead of that lookalike being based on Facebook variables like your friend circle and what pages you like and stuff like that, this is based on kind of signals in the data around need and likelihood to purchase life insurance. And then we can take that that audience and deploy it to Facebook and OTT and some of our other channels. And instead of kind of having to do spray and pray, like when we started, we launched kind of big national TV campaigns that just didn't do much for us, right? We can be really targeted into the, people that we think are potential customers, right? So both of those just allow us to be a lot more efficient with our marketing. We don't have to spend a lot on huge, big brand awarenesses. We don't have to put our name on a stadium. It really allows us to be focused, targeted, and direct with the customers that we think are most likely to purchase and have a need for life insurance and be willing to purchase that online.
But who knows? Maybe there will be a Haven Life Stadium at some point,
Push
down
for
the
that.
road, a
Getting
decade
shots
down
on
the
it.
road, Haven Life Stadium.
Mhm.
But anyway, so when we were doing our preparations for the panel, of course, we started talking about the pandemic, because how can you not talk about the pandemic and how it affects insurance is particularly interesting, because anybody who's ever bought life insurance has had that lovely person in your dining room pulling the scale out of their bag, their tote bag, so that you can get on the scale and weigh yourself right in front of them, which is just so fun. So how has the worldwide pandemic impacted your marketing and product plans?
Yeah, I think I'll take this one first. It's interesting, right? So you look at Google search trends for life insurance and specifically action-based, like buy life insurance or get life insurance, right? In March and April, they were up 300%, over kind of the historic trend lines, right? And that was awesome. It drove a lot of traffic to our site. But then you kind of ran into this operational bottleneck of, okay, these people need to go out for medical exam now. And in the world of a pandemic, people are not willing to either have that paramedic come to their house or go out to a lab location. So we did a couple interesting things. One is, we launched a simplified issue product, right? So this is 100% no medical product, allows you, if you qualify, to skip that medical exam altogether. So that was one thing just that we got out. We had that in the pipeline for a while, but the timing and the ability to get it out earlier was great. We made some operational changes, like allowing you to send us your electronic health records, allow you to delay your medical exam, offer you temporary coverage, stuff like that. And we did some creative changes too, right? So we focused more on internal settings and found our Facebook and our TV ads, people on their couch. We kind of even brought that into the messaging a little, apply, and get life insurance from the comfort of your couch, very subtly speaking to the pandemic without actually speaking to the pandemic. And it was good for us. I think we had easily our best quarter ever in Q2 on the back of the pandemic, just built upon some of the operational changes we made and just the uplift in consumer demand.
Yeah, I would think we all thought we were going to die in March, so that's the time to buy life insurance, right? When you think you're going to die next month.
Yeah.
So,
yep.
Yeah.
But we've been able to kind of hold that momentum. And I think, like I said earlier, that we had our highest NPS ever that quarter. So a lot of the operational challenges obviously helped kind of spur that score.
And thankfully, not everybody died. So
Yeah, thankfully.
that's good.
Amen.
That's a good start to getting back to normal. So Nick, how about you guys?
Speaking of people dying, we launched a commercial with my CEO, the insurance angel, taking your insurance woes away in March, 2 weeks before the lockdown. Talk about like poor timing. So I pulled that thing down dramatically, or, I stopped it before anyone gave me any negative feedback. But that was the first like, oh crap, I just came up with a fun, clever spot that seemed to be working well that I had to stop and kind of throw out, which, fair enough. For me, I think, obviously the pandemic has helped us from a growth perspective. There's that positive, right? People, when there's economic uncertainty, absolutely can use that extra dollar. So we found our product market fit, and I tested new messaging and found my existing messaging saying, hey, 7 out of 10 people overpay for home and auto insurance. Finally, there's an unbiased way for you to see if you're overpaying or if you can get a better deal. So that's very resonant. And so I actually went back to older creatives that were very direct, but very topically relevant based on what was going on. A couple of things for us from a conversion rate perspective in core business is, sometimes of our 40 carriers, we have the big guys, right? The big national brands that you're familiar with, Progressive and Safeco and Nationwide and all these guys, right? But we also have smaller ones that are regional that not everyone's heard of. Typically people are hesitant, right? Oh, I can save a bunch of money, but I've never heard of that. Are they going to pay out a claim? Can I trust these people? What I've found that people are a little bit more open to these brands they hadn't heard of, actually quite a bit more open now that, we are where we are with the financial situation, right? I need to be insured. It's important I'm insured, but I don't care if, the brand as much, as long as I know they're going to pay my claim. So we've seen some positive tailwinds from there as well. The other thing, as a business, the previous question around agility and optimization, as a young brand, I do much more television advertising than I've ever done at a brand this stage, right? And so one of my key objectives in the first quarter was, hey, deleverage some of my dependency there and start to grow out the portfolio, just like any other growth or marketing or acquisition person would do as I grow, right? I had 1 marketer in January. I have 7, 8 on my team today, right? So lots of work still to do. So my objective was pull back from TV, and then the pandemic happened and it was so resonant and the rates dropped so much and response rates jumped. That I leaned into it, right? And so I actually spent more on TV in a quarter where my objective was spend less, right? But, and then all of a sudden in June, things started opening up and that stopped working, right? And it still worked, but it stopped working as well as it worked. And I had to pull back and go to, what were dust off my Q1 objectives? And these are first world problems, right? We were lucky in that we've seen tremendous revenue growth and efficiency growth over the last 6 months. But it hasn't been, sit on the couch and watch it happen. It's been a lot of rolling up the sleeves and being agile and making sure that we have the right resonant message in the right channel. Because as a, Series B startup, our numbers and our business plan look like this. And we're lucky enough to have reforecasted to continue to drive growth versus needing to take expectations down in a tough environment. So, the hard part is when you are a venture-backed company and you do well in the pandemic, your expectations actually continue to rise. So I kind of set myself up for this, but that's why I do this, right?
Right. Lots of pivoting, unfortunately, or fortunately, I guess, like you said, it's a good problem to have. So, well, unfortunately, I think we are almost out of time. So I think Steve was asking the audience if there were any questions. Do we have any questions?
Hi, boys. I've had both of you under my thumb in the past. Hi, guys. So let me drill into. We'll round out with the one big question. And Nick, you already started answering this. What was the media plan, especially during the pandemic? You're both very, very performance oriented, very data driven, like all D2Cs. But what were the key channels where you really were getting traction, and how has that evolved just in the last 6 months?
Yeah, I'll continue and be succinct and let Matt answer, since I started to half answer this question, Steve. We had a big bets on local radio endorsement that we had to pull back on dramatically because people stopped driving to work, right? We had a big pullback on TV that then changed to invest in TV. We saw quite a bit of increase in our spend in streaming and OTT, right? The penetration there and the usage there went up. And typically you say, oh, that's a younger audience. And my average age is a little bit, 30, 40 years old. The 30, 40-year-olds are now using streaming as well. So it's a big channel for us. I'd say Facebook kind of has, just like every other marketer, is up and down. There's months where you're like, we cracked it. And then there's months where you're like, crap, back to square one. So I'd say kind of there were CPM gains and losses, and Facebook is Facebook. What has grown a lot for us is our partner channel. So where I have partnerships with some of these fintech folks, some of them on this call today, right around distribution. If I'm going to use an app to save money on all of my bills, can I be positioned in that ecosystem? Right. So that stuff has grown dramatically and actually been a place that I'm going to double down on based on kind of the learnings of the last 6 months. Matt?
Yeah. The first place we invested in was obviously paid search to capitalize on just the increased search volume. We took advantage of the incredible inventory available on OTT and streaming as well. But that's core to our plan. We got a lot more kind of bonus out of it than usual. And we grew out our partner business a lot. Partners are now about 12, 13% of our business from just about nothing. So that came up a lot. Again, like-minded financial service institutions have a large kind of membership base looking for kind of security in a tough time. The one interesting one that I don't think anyone mentioned is we took a gamble on TikTok. Incredibly low CPMs, incredibly high click-through rates, but net equaled out to about Facebook in terms of conversion. The conversion rate's a lot lower, but you kind of make up for that with low CPMs, high click-through rates. It's an interesting way to play with vertical video. You can try it either as kind of your standard produced vertical video that you do on Facebook and Instagram, and we tested out a little bit of user-generated content using a couple of our policyholders. It was interesting. Definitely something I think once we get through the whole Microsoft, Oracle, everything, and it seems all good, well, something we'll get back into again as well.
Is it, by the way, so let me want to follow up because I got one quick question that came in from the audience about, are there any industry verticals that you found especially effective? Is this all data driven without regard to context, or are there any industry verticals that you're marketing in that you're finding especially effective?
What do you mean industry verticals?
Yeah.
I think we mean content.
Well, the obvious is how I can save money and be smarter with my money in this economic uncertainty has grown quite a bit. So some of those partnerships with financial publications, right? The NerdWallets, the penny hoarders, all of those types of guys saw a big influx, and we were able to take, advantage of that. That specifically for me stood out. More lifestyle stuff didn't work as well. It doesn't typically do great for me, but worked worse than it normally does, right?
Yeah, and I'll piggyback on Nick there. Financial self-starters, personal finance sites are definitely kind of the big industry vertical. The one additional thing I would say for us, because buying life insurance is very much life stage driven, is kind of parenting content, new parent checklists, a little bit around prenatal, but most postnatal, kind of that first year, 6 months after a child's born. It's when you start to think about our product.
Thanks, guys.
Sure.
And thanks, Tanya.
Thank you, guys.
Thanks. We have to wrap. We've kept you a long while, but thanks, guys. Good to see all of you again.
Thanks, Steve. Thanks, Tanya.
Take
Bye now.
Bye.